Good morning to everyone. Call this hearing to order. Let me first thank the witnesses for taking the time and making the investment of your talent for this committee to appreciate the issues that are challenging so many Americans around the country. So I really appreciate you guys being here. Our committee seeks to answer a simple question. How do we make life more affordable for families in South Carolina and, frankly, around the country? That is a question I hear all the time at home. How do we make this economy work for families who are already working hard, but too often there's just too much month at the end of the money? Housing is too expensive, food is too expensive, borrowing is too expensive. Everyday life is simply too expensive. A family in Walhalla, South Carolina, trying to buy their first home, a small business owner in Greenville trying to expand, or a senior citizen in Rock Hill, South Carolina, living on a fixed income should not have to wonder whether Washington understands what it means to choose, I mean this sincerely, to choose between prescriptions or groceries. Affordability is not created by government programs, more red tape, or more spending we cannot afford. Affordability comes from promoting competition, innovation, and opportunity. That is why Senate Republicans have been focused on results that will bring relief to everyday Americans. We are approaching the one-year anniversary of the Working Families Tax Cut Bill, a bill that has put more money in the pockets of Americans who desperately need it. Because of this bill, 97% of Americans received a tax cut this year. 97%. And the people who benefit the most are people earning less than $200,000 a year. Hardworking American families will take home nearly $300 a month more because of the Working Families Tax Cut Bill. Let's not forget, every single Democrat in the Senate voted against cutting taxes, which would have led to a $5 trillion tax increase. This committee has already advanced efforts to improve housing opportunity, create clear rules for digital assets, strengthen our markets, and make the financial system work better for everyday Americans. Our 21st Century Road to Housing Act, which just passed the Senate by historic margins, I think it was 85-4 yesterday, almost nothing happens in the Senate. Nothing happens in the Senate, 85-4. We cut red tape, we are unlocking housing supply, and preserving local control. I look forward to President Trump signing that legislation into law. The Genius Act, signed into law last year, established a first-of-its-kind regulatory framework for payment stablecoins, fueling financial innovation in America and creating economic opportunity. The next step is solidifying American leadership in digital assets, in completing market structure legislation, and I'm proud of this committee's work to advance Clarity Act on a bipartisan fashion. Beyond legislation, we also have pushed for better implementation of my Credit Score Competition Act. So millions of Americans who are today credit invisible will have an opportunity to earn the kind of credit scores and interest rates that they deserve by populating all of their information on the credit scoring agencies. And we have supported thoughtful regulatory right-sizing that helps protect consumers without driving up the cost of credit. Unfortunately, too many in Washington still believe the answer to every problem is more government. We saw this during the Biden administration. Reckless spending and heavy-handed regulation made life more expensive and made it harder for businesses to invest, lenders to serve their communities, and builders to build. We should be clear, regulations, they have a cost. When Washington makes it harder for a bank to lend, a business to invest, a builder to build, and an entrepreneur to grow, those costs do not disappear. They show up in higher prices, fewer choices, and fewer opportunities for American families. That is why cutting red tape is also an affordability issue. Agencies should protect consumers, not be weaponized for a political agenda. The Biden administration should never have used the CFPB to target disfavored financial sectors, restrict access to credit, or punish responsible lenders. That made it harder for families and small businesses to access credit while making financial products more expensive. Senate Republicans are working to bring these costs down at the same time the Biden administration was working to raise those prices. Families in South Carolina and across the country are still living with the consequences of the Biden-era policies in their monthly bills, their mortgage payments, and their household budgets. Families do not need more slogans. They need lower cost, better opportunities, and a government that gets out of the way as Americans try to build a better life. Today, I look forward to hearing from our witnesses about practical steps we can take to lower costs, expand opportunity, improve affordability, and reduce unnecessary regulatory burdens without growing government. Senator Warren, you are now recognized.
Thank you, Mr. Chairman. I want to thank you for holding today's hearing on affordability. It's only Tuesday, and our committee's already had a big week.
We have to do.
Yesterday, the Senate passed our 21st Century Road to Housing Act, and now the House is on its way to passing it too. This is the biggest housing bill in more than 30 years. It will help build more housing, bring down costs, and for the first time ever, stop private equity from snapping up homes that families are trying to buy. And your leadership helped make that happen.
Thank you, ma'am.
Our housing bill is an affordability accomplishment that everyone on this committee can be proud of. But it is not nearly enough to offset the economic policies of President Trump and the devastating impact that they have had on American families. So let's set a baseline. When Trump took office, inflation was down to 3% and headed down. The first thing he did was slap tariffs on nearly every item from nearly every country. These tariffs will cost the average American household more than $2,500 this year. Now, the Supreme Court struck down these tariffs as illegal, and the administration has not lifted a finger to give consumers a refund on the very high prices that they paid. Then came Trump's illegal war with Iran, which caused energy prices to skyrocket. The impact of the war continues to jack up costs for every single sector of our economy. Families have spent $43 billion more on gasoline alone than they would have if Trump had never started this war. Trump spent billions to cut renewable energy projects, the kind of energy that would actually lower utility costs. And Trump and Republicans have sent health insurance premiums soaring, with next year's premium hikes already on track to rival last year's record-breaking increases. In between these disastrous policies, it has been nonstop Trumpian extravaganza of corruption and incompetence. Anti-consumer mergers that will drive up costs for everything from cable TV to credit cards get rubber stamped under the shadiest possible circumstances. The CFPB, which has returned more than $21 billion directly to families that have been scammed, has been hollowed out and sidelined. DOJ fired the USDA team responsible for preventing screwworm, and now an outbreak threatens to bankrupt ranchers and send already high beef prices through the roof. And one white-collar criminal after another gets DOJ dismissal or a Trump pardon, sending a clear message that it is okay for wealthy insiders to rip off families and consumers. And what's the result? Inflation now sits at its highest level in 3 years, 4.2%, nearly double what it was last year. Americans are paying more for groceries, for health care, for gas. The Federal Reserve is forecasting higher inflation, higher interest rates, and slower growth. And the American people can see plain as day that as the economy gets worse, Trump gets more chaotic. Trump focuses on building his golf course and his giant ceremonial arch, getting the right marble for his taxpayer-funded gold-encrusted ballroom, with no thought to the rising costs that are bearing down on Americans. The same guy who ran for office saying he would tackle inflation on day one now calls affordability a, quote, hoax and a, quote, made-up word. He says, quote, I don't think about Americans' financial situation. He says that he, quote, loves the inflation. Trump doesn't care about hardworking Americans. He cares about making himself richer by cutting crypto deals and making thousands of stock transactions with companies whose value he can boost with deregulatory policies or giant government contracts. Trump's billionaire friends are along for the ride. They're getting richer by the hour, while American families are stuck with the bill. The world just got its first trillionaire, and the Trump family's wealth is up by at least $2.3 billion since just last year. And meanwhile, Americans' real wages since Trump was sworn into office 18 months ago have fallen. Mr. Chairman, I am glad that we are having this affordability hearing today. It is a stark reminder of the president's failures. Americans want Washington to make affordability our first priority. And instead, all Donald Trump is offering are higher prices, more chaos, and unprecedented corruption. I look forward to our conversation today.
Thank you. I now recognize our first witness, Mr. Cody Carbone, Chief Executive Officer at the Digital Chamber. You now have 5 minutes.
Chairman Scott, Ranking Member Warren, members of the committee, thank you for the opportunity to testify today. I'm honored to be here this morning. My name is Cody Carbone, Chief Executive Officer of the Digital Chamber, the world's largest digital asset and blockchain trade association. Our members span more than 250 companies, from the world's largest exchanges and banks to startups, innovators, builders, and developers. I'm here to talk about how digital assets can make life more affordable by calling attention to a hidden tax most families never see, but they feel: the cost of moving money and the cost of moving assets. It's simply too expensive and takes too long to move money and assets today. Nearly 1 in 4 American households live paycheck to paycheck, and the Federal Reserve reports more than a third couldn't cover a $400 emergency without borrowing. For those families, a credit card swipe fee or a 3-day hold isn't just an inconvenience, it's an overdraft, a late fee, or a payday loan. Yet digital assets and blockchain are the first real chance in decades to help people move the money they've earned more easily, to make sending money as simple and efficient as sending an email, and to end that tax. Today, I will discuss how digital assets can help lower costs in 3 areas. First, the cost of moving money across borders. Americans send more money abroad than any nation on earth, more than $100 billion last year. It costs 6.5% to send, more than double the international target, and takes 3 to 5 days to arrive. That's more than $6 billion a year skimmed out of working families' pockets. A worker sending $100 home to a foreign country sees only $93.50 arrive. However, if they were using a dollar-backed stablecoin, that family keeps the full $100 and receives it in seconds. The same wall hits the freelance designer in South Carolina, paid by a client in Europe, or a manufacturer in Ohio, paying an overseas supplier, which is why business-to-business payments are already the single largest use of stablecoins today. The rails work, and cheaper cross-border payments make American businesses more competitive. Second, closer to home, more competition in everyday payments. There's real cost embedded in how we pay today, and Americans deserve more choice. A regulated stablecoin is one more option. Cheaper to process, settling in seconds, and it's a tool banks can offer too. Under the Bipartisan Genius Act, banks themselves can issue these products. This isn't about taking anything from the system we have, it's letting a cheaper, compliant rail compete so a merchant can pass a discount to customers at the register. And third, the biggest purchase most families will ever make, a home. Today, thousands of dollars vanish into the process of transferring a home. Closing costs of up to 5%, often more than $10,000, much of it just to establish who owns what and to move the money. Tokenization attacks that directly. It records ownership clearly, settles in seconds instead of weeks, and strips out the layers of middlemen who each take a cut. Independent analysts estimate that cut of tokenization can cut transaction costs by 35 to 65%. This is big in housing, but the same approach reaches car titles, equities, treasuries, small business invoices, and more. And it opens the door the other way too. Tokenization provides for fractional ownership, which lets a family own a piece of a wealth-building asset for as little as $1 instead of being locked out like they have for decades. Tokenization is real, it's growing, and the savings are already proven in the institutions using it today. This committee deserves real credit. The Genius Act is working, and finishing the job through the Clarity Act is the best chance Congress has had to set clear rules of the road. Clarity is closer than it's ever been, and I'd urge the Senate to finish it this year. Clear U.S.-based rules are what unlock tokenization for ordinary Americans, keeping this activity onshore and creating good-paying jobs. Because in the end, the cost of moving money and moving assets is real, and it shows up in every household budget. The Digital Chamber is proud of our role in helping Americans shed that burden and working with this committee. Thank you for your time, Mr. Chairman and Ranking Member Warren, and I look forward to your questions.
Thank you very much. All right, next witness will be Mr. Kevin Brown, the President of the National Association of Realtors. You are now recognized, and thank you all for your support of the housing bill as well.
Thank you. Thank you, Chairman Scott, Ranking Member Warren. Members of the committee, thank you for inviting me to testify at today's hearing on America's Affordability Agenda. My name is Kevin Brown. I'm the 2026 President of the National Association of Realtors, the largest trade association in the country with nearly 1.5 million members. I'm also a broker-owner with Better Homes Realty, Rockridge, and Oakland, California. Every day, realtors work with families and individuals who have saved, worked hard, and maintained good credit, yet still cannot find an affordable home. The numbers are staggering. Housing remains one of the largest drivers of economic growth in the country, making up nearly a fifth of the U.S. economy. But the supply of homes to purchase has collapsed. The American population has grown nearly 30% since 1995, yet the existing housing stock has actually dropped more than 25% from 1.58 million units in 1995 to 1.18 million units today. The median annual home price has skyrocketed to over $400,000, and the average age of the first-time home buyer is now 40 years old. This is not sustainable. Thankfully, under the leadership of this committee, meaningful changes are on the way. The 21st Century Road to Housing Act is the most consequential housing legislation in decades. The bill strengthens many existing programs and streamlines others while cutting red tape and removing barriers to housing development. In particular, the bill reforms federal housing programs such as the Home Investment Partnership Program and the Community Development Block Grant Program to be more flexible and effective. The legislation modernizes financing for rural manufactured and modular housing and updates FHA multifamily loan limits to reflect today's market. It also streamlines federal environmental review and increases coordination across agencies. On the state and local side, it provides resources and incentives, not mandates, to help communities build and preserve homes. The Housing Supply Frameworks Act requires HUD to work with stakeholders to develop guidelines and best practices for addressing zoning policies that block housing production. The bill includes funding to develop pre-reviewed design libraries of ADUs, duplexes, townhouses that can help streamline permitting. It also creates planning grants to support affordable housing strategies at every level of government and a home renovation pilot to help families preserve the home that they already own. The House and Senate now agree. We look forward to this legislation being signed into law, adding to other successful reforms from Congress, such as opportunity zones and low-income housing tax credits. We know the 21st Century Road to Housing Act will have the same meaningful impact, but as we all know, there is more work to be done. We know it will take time to build more homes, but we also need to ensure that communities don't adopt short-sighted, quick-fix things to address affordability. In my home state of California, we have seen policies that do more harm than good. While solutions like rent control may be popular, the on-the-ground results only water down personal property rights, discourage more development, and push mom-and-pop housing providers from the market. Property ownership works best when property rights are strong. That's what allows consumers to build and protect equity, the foundation of long-term wealth. While rent control may be seen as a way to protect tenants, in practice, it limits housing opportunities and makes them more expensive. This is why it's critical that the federal government take the lead in meaningful, lasting solutions. Realtors look forward to working with Congress on additional reforms and policies such as More Homes on the Market Act, a bipartisan bill that would double the capital gains exclusion threshold on a primary residence for the first time in nearly 30 years, while adjusting the caps to reflect future inflation. Just like people who are locked into their homes at lower interest rates, seniors are often locked in because of the home equity penalty. This legislation expands existing housing stock and gives seniors the opportunity to tap equity that they have counted on for retirement. In turn, move-up buyers can then buy homes, thus freeing up houses for first-time home buyers. Additional policy solutions are included in my written testimony. We know there is no silver bullet that will quickly fix the supply and affordability crisis, but the solutions this committee has championed will help the housing market for decades to come. Thank you, Chairman Scott and Ranking Member Warren. I look forward to your questions.
Thank you, sir. Next, we'll hear from Dr. Morgan, President of the Century Foundation. You are now recognized.
Chairman Scott and Ranking Member Warren, thank you for inviting me to testify before the committee today. As a public policy think tank dedicated to improving the lives of all Americans, the Century Foundation has been acutely focused on how rising costs are affecting working families. While President Trump is calling affordability a hoax or a fake word and confessing that he does not think about Americans' financial situations, families are dealing every single day with the cost of living crisis that Donald Trump promised he would fix. From his first days in office, President Trump has gone back on his campaign promises, layering one price hike on top of another. Starting on so-called Liberation Day last April, the Trump administration set off a series of tariffs that have cost American consumers an average of about $1,700, increasing prices on a wide variety of must-have items, from groceries, clothing, and school supplies to building materials and electronics. The Trump administration and Republicans in Congress then pushed through massive tax cuts for the wealthiest Americans, paid for by increasing the cost of health care, higher education, energy, and food for ordinary families. While the wealthiest Americans got a boost, those tax cuts for the ultra-rich cost the lowest income families about $1,200 a year. In fact, any benefits that average families may have seen from Trump's tax plan were completely wiped out by a war with Iran that is keeping gas prices at nearly $4 per gallon and has cost families an estimated $100 billion to date. On the Trump administration's watch, some of the biggest expenses for ordinary families have become even less affordable. New car prices hit record highs, health insurance premiums have spiked, home prices rose again this last year, and rent and mortgage payments both remain alarmingly high. And prices are only one side of the equation on affordability. Wages are the other. Since returning to office, the president has directly cut the wages for home health workers and farm workers, wreaked havoc on the agencies responsible for ensuring that workers can exercise their rights, and in 2025 ushered in the worst year of job growth since 2020. The cumulative impact of these policies has been disastrous for working families. Our research shows that half of Americans report skimping on healthcare services or taking on debt to deal with their rising healthcare costs. Half have had to tap into savings to meet their day-to-day expenses. In one survey, 1 in 3 respondents reported that they or someone in their household has skipped meals to save money in the past year. Americans are increasingly forced to use debt to make ends meet, but high-cost loans are pushing families further over the edge. Outstanding credit card balances stand at around $1.25 trillion, with delinquency rates of more than 13%, the highest level since the Great Recession. Student loan delinquencies have also shot up under the Trump administration, from nearly 0 to about 25%. Auto debt has exploded. Bankruptcy filings increased almost 12% between 2025 and 2026. Home foreclosure filings are up 26% from the last year and are the highest they've been since 2020. This mountain of debt adds a new dimension to the affordability crisis. Driving down the prices of individual goods and services won't fully alleviate the pain that families are feeling or the drag it places on the economy. Lower gas prices next week don't mean all that much when you're still paying off your price at the pump from the last week or last month's groceries at a 24% interest rate. Not everyone is losing in the Trump economy, however. The Trump administration has engaged in a relentless, corrupt agenda of self-enrichment, deregulation, corporate pardons, and sweetheart deals for the wealthy and the well-connected. Some of the beneficiaries are represented here in this room, like the banks that continue to derive excess profits from overdraft and credit card late fees that cost consumers $15 billion a year. This committee has the power to advance legislation that would help save Americans billions of dollars. I applaud you all for starting with housing, an area of critical need, and I saw this morning that Senator Warren and Senator Moreno are working to save Social Security as well. But with 110 million Americans unable to pay off their credit card balances each month and banks tucking massive profits into historically high interest rates, there is much more to be done. The affordability crisis is not a hoax. It's a backbreaking reality for the vast majority of Americans. This committee must take action to address it, and I look forward to your questions. Thank you.
Thank you, ma'am. We'll now hear from Ms. Lindsey Johnson, the Community Bankers Association.
Thank you. Chairman Scott, Ranking Member Warren, and members of the committee, thank you for the opportunity to testify. My name is Lindsey Johnson. I'm President and CEO of Consumer Bankers Association, the nation's only trade association exclusively focused on retail lending. For as long as there's been an American economy, banks have helped families and small businesses build within it. That work often begins with something simple, safeguarding a paycheck, and it grows from there. Banks take deposits and put them to work in communities, helping consumers establish credit, finance an education, buy a car, purchase a home, or start or expand a small business. For millions and millions of Americans, a credit card or a small loan can take a family from credit invisibility to financial opportunity. The same is true for small businesses. Many begin with a founder's personal credit card, grow into a small business loan, mature into an enterprise that takes payments, manages cash flow, hires employees, and serves their communities. At every stage, banks are alongside them. But the true measure of a bank is not just what it does in good times. It's what it provides when life doesn't go according to plan. When a paycheck and a bill don't line up, when a car breaks down, or when hours are cut, bank products can be the bridge between a difficult month and a genuine crisis. A credit card, an overdraft service, a home equity line of credit can help a family absorb a shock, stay current, and keep moving forward. Banks also provide another layer of support for consumers that they may not see: fraud prevention, payment security, and technology that makes modern commerce possible. Banks do well when their consumers, small businesses, and their communities do well. Today's economy and consumers are remarkably resilient, but affordability is a real concern for many families as essentials like housing, healthcare, food, and transportation, what we refer to in our written testimony as the 4 horsemen of affordability, continue to pressure household budgets. As costs have risen, families, particularly those at the bottom of the K-shaped economy, feel it more acutely. Consider the median household making around $68,000 after taxes, or roughly $5,700 a month. Essentials like housing, vehicles, healthcare comprise around 2/3 of their budget, and if you add childcare in there, it consumes around 75% of the budget before utilities, gasoline, retirement savings, and other recurring costs. By year's end, this household has a net savings of around $540, or roughly $45 a month. It's an incredibly thin margin where a single unexpected expense can upend a family budget. And 75% of Americans experience at least one expense shock a year. On average, that expense shock is around $5,000. For consumers like this, low-cost financial products from Main Street banks can help manage and smooth out those unexpected expenses. Conversely, credit cards and other products and services that serve as shock absorbers comprise a very small amount of the consumer's budget, as credit card interest accounted for roughly 1% on average of the household budget in 2024, for example, and overdraft and other fees are even less. Congress, this committee, and the administration deserve credit for advancing solutions focused on core sources of affordability challenges, including pending bank capital rules that are going to enhance banks' abilities to lend, bipartisan work on housing expansion and supply, and support for small business lending. CBA also appreciates the focus on fraud and scams, a fast-growing threat costing Americans billions every single year. Combating it requires stronger coordination, accountability, law enforcement engagement, and more engagement across technology, telecom, and non-bank marketplaces. As policymakers consider additional solutions, it is so critical to preserve the financial tools that help families manage those unexpected expenses. Quick fixes like credit card rate caps may seem appealing, but they simply reduce access to credit, and they make it harder for consumers who need it most to access that credit, and instead pushes them to less regulated alternatives. A better approach, detailed in my written testimony, is to address affordability challenges at their source while maintaining responsible access to credit. Banks cannot solve structural affordability and income challenges alone, but we can and do help families manage through it, ensuring access to essential credit and liquidity in a competitive and sustainable way. The last 6 years have presented some of the most unprecedented challenges to the economy and consumers in modern history. Yet banks' role to support consumers and small businesses during this time led to much greater resiliency for families, for businesses, for communities, and the broader economy, as banks were the driving force in the fastest post-pandemic recovery in modern history. Banks will continue to serve as foundational partners in American life and will support stability and help families achieve their own American dream. Thank you again, and I welcome your questions.
Thank you very much. Each member of the committee will have an opportunity to ask questions of any of the witnesses for up to 5 minutes, and then we'll move on. I'll start. One of the things I said during my opening comments was that because of the Working Families Tax Cut bill, 97% of Americans saw their taxes go down, and the focus of those tax decreases were on people making less than $200,000 a year. 100% of Democrats voted against the tax cuts for 97% of Americans. $5 trillion is just a mind-numbing amount, but $250 a month is something I can understand. Giving Americans $250 additional dollars because of our Working Families Tax Cut bill that showed up in tax returns, an increase on average of 11%, is just another way the Republican majority is working on behalf of the American people, making 2026 the year of affordability, working in the right direction. I'd also add to that, comparisons matter. The contrast between the Biden administration years, where the average family was losing more than $1,000 of purchasing power a month, and inflation got as high as 9%. And oh, by the way, don't forget, gas prices, June of 2022, $4.88 a gallon on average. On top of all of that, one of the most oppressive regulatory environments in modern history brought to us by the Biden administration. Digging out of that hole has taken time, without any question. And when I think about the regulatory burden put on top of the average person in this country, I think about the regulatory options like Basel III, an initiative coming to the table that fortunately and thankfully we were able to dodge that really devastating bullet to the American people. Now, most people may not be as familiar, Lindsey Johnson, as you are with the Basel III provision. Let's talk about that for a few minutes, because my understanding is the more money you park on the sidelines, the fewer dollars you have for first-time home buyers, starting a small business, purchasing a car, and you add on top of that one regulatory option, another one through the CFPB, spying on businesses, looking for ways to bring more onerous pain into the lives of just working class small business folks trying to make their ends meet. That regulatory pressure on top of the economic uncertainty created an instability that I'm not sure that we fully appreciate or have absorbed completely. Thoughts, Ms. Johnson?
Well, I'll start with your the conversation around Basel and just capital proposals and regulatory burden generally. You know, your comment is right. We have to get that balance between safety and soundness and allowing a bank to be a bank and wanting a bank to compete with all the other non-banks in the atmosphere. More competition means more safe product options. And what we saw before under the Basel III proposal that was released in 2023 was something that outstripped even international standard. It would have made U.S. banks far less competitive, push banks outside of certain lending segments. And mortgage, you know, banks are already a much smaller portion of that market than they were before. The more we can get that competition in the marketplace, the lower cost will actually lower because competition, that's what it's there for. So that's one example. And then I would say on the CFPB, look, the CFPB, we need a CFPB that's credible and durable and stable. We need a CFPB that does a true cost-benefit analysis, a rigorous cost-benefit analysis to understand how the rules that it's writing are actually going to impact consumers. And oftentimes, whether it was credit card late fee or overdraft, they simply overlooked it. Consumers were going to lose access to these products by their own admission on credit card late fees. 74% of people were going to see their costs go up. And that small portion of people who are frequent late payers would see some benefits, but they didn't take into account that their credit score was going to be hurt long term, driving their costs up. We've got to do a better job of having an honest conversation that's apolitical at these agencies so that we can really drive cost savings to consumers.
With my time that I have left, with just only about 30 seconds because I'm the chairman, so I can't tell time. Mr. Brown, you said that you have more solutions in your written comments. In about 15 seconds, could you provide us with one solution you think would make housing more affordable that you haven't heard so far?
Sure. More Homes on the Market Act, which is also a bipartisan bill before Congress, provides for a doubling of capital gains. The capital gains exemption from $250,000 and $500,000 for a married couple to $500,000 for a single person, $1 million for a married couple. That would free up. There are people on the sidelines right now just waiting because they either don't want to pay the tax or can't afford to pay the tax. And so that would free up inventory. You don't have to put any shovels in the ground. There would be instant inventory into the marketplace where buyers would come in, buy that property, which would free up some housing also for first-time home buyers. So
Thank you.
And thank you for your work on that, by the way.
I appreciate that.
You.
Thank you, Mr. Chairman. You know, I'm really glad that we are holding a hearing about President Trump's affordability agenda, and I am glad that my Republican colleagues don't seem to agree with President Trump's claim last week that, quote, affordability is a fake word made up by Democrats. In fact, I want to ask our witnesses about that. So raise your hand if you agree with the president that affordability is a hoax made up by Democrats. I'm giving you time here. Okay, no hands up, and I assume that means none of you, Democrats or Republicans, agree with President Trump that the affordability crisis facing American families is a hoax, and that seems right to me. You know, President Trump's agenda has driven up costs so that families are putting more of everything, from groceries to gas, on their credit cards. Trump's own top economic advisor, Kevin Hassett, recently bragged that, quote, credit card spending is through the roof. He's right. Over 100 million Americans have credit card debt now, many of them putting groceries and gas on their credit cards just to be able to make it to the end of the month. And delinquencies are at the highest level since the crash of 2008. So let's talk about affordability. In January, President Trump promised to cap credit card interest rates. He politely asked the biggest banks to put in place a one-year 10% cap by January 20th. Now, Ms. Johnson, your organization represents some of the biggest banks in the country. We are more than 5 months past Trump's January 20th deadline. Which banks have implemented the one-year 10% cap on credit card interest rates that President Trump promised to deliver?
So thank you for the question. There's a couple of things I'd love to say. One, banks offer 0% APRs today.
I'm sorry, I had a specific question. Donald Trump told the banks that they should lower their credit card interest rates to 10% by January 20th. He said that's what he would deliver for the American people, promised it to everyone in America. And I just want, which banks have actually lowered their credit card interest rates to 10%? Can you give me their names?
There are definitely options that are low-cost APR
I'm sorry,
options.
which banks have lowered
But the
their
problem
credit
is,
card interest rate to 10%? Are there any that are at 10%? Can you name one?
I can tell you that there are options today.
Can you
available. They
name
don't have a
one
cap at
bank
8%
that
they
has
will offer.
lowered its credit card interest rate as President
And
Trump
no bank
politely
wants to cut off
asked?
credit to
Has there
people
been one?
with below 800
Has
credit
there
scores,
been one?
including advocates
Has
who
there
say
been
if
one? One?
there are options in the marketplace for sure, but
So not a single one has followed through on what President Trump told them to do. So President Trump and the big banks, they don't provide the 10% cap on credit cards. Ms. Johnson, how much more have Americans paid in interest on credit cards than they would have paid if the cap the president promised had taken effect? What's the number?
so again, I want to go back to
What's
rate
the
card.
number?
The rate, so we have not done that calculation.
I'll
Bill. I
bet you
do
haven't
want-
done
I
that
do want to-
calculation, but here's the thing, I have. It's $57 billion in credit card interest rate above 10% that Americans have paid since January 20th. By the way, if you just do the math, that's $368 million a day. Now, President Trump promised he was going to make banks lower credit card interest rates for families by January 20th. And so far, families have been paying $368 million a day for Donald Trump's broken promise. Now, we know that families have less money to spend and are falling behind on their bills thanks to Donald Trump's economic policies. Dr. Morgan, if you can tell me very briefly, how are people coping with these tighter finances?
I mean, families are really struggling. As I said earlier, 1 in 3 are skipping meals. They're skipping medications that are prescribed by their doctors. They're skimping on healthcare services, and they're turning to debt. I think it's important to know that's a both and, right? We're seeing people both cut back on the things that they need to live their lives and also put their expenses onto high-cost debt, both credit cards, buy now, pay later, paycheck advance loans.
Thank you. President Trump may love inflation, but it's killing American families. Congress needs to work together to fix the president's failed economic agenda and to make life more affordable for all Americans. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Look, I really appreciate the fact that the chairman and the ranking member have come together to have this discussion on where the costs are right now for American consumers. And I think it's really important that we talk about all of the impacts. I noted that there's always a desire to have your cake and eat it too. Sometimes that's not possible, particularly when we talk about how we go about financing activities in our daily lives. I'm just curious, Ms. Johnson, you represent a lot of banks that issue a lot of credit. How many people today have credit cards in America?
A couple hundred, actually almost 282 million people have credit cards. I will say,
282 million people have credit cards today. Can you imagine not having credit and being able to survive in today's digital economy? I'm just curious. Can you? I mean, we use them to get on an aircraft, but we also use them to literally do digital shopping, anything over the internet at all. Telephones we pay for with a credit card in most cases. Just thinking back about this thing here, one of the greatest threats to a lot of people being able to survive on a day-to-day basis is if they couldn't get credit. What would happen? I'm just curious. I think the president really wanted to find a way to try to suggest that he wanted the marketing side of things to be able to be incentivizing and to offer people low interest rates. But a lot of credit card companies offer 0% interest rates for short periods of time. Can you talk a little bit about what would happen if, and I presume you've done the work on it because you represent the banks that really issue these cards. What would happen? What would be the impact if government were to step in and artificially say you have to have an interest rate of 10% less or less on credit cards? What would happen to the number of people that would have availability of credit cards today?
So it's such an important question, and it's the right question, because ultimately it's the best way to make sure that someone only with an 800 credit score has access to credit.
You said what?
Only people with an 800 credit score would have access to credit.
So how many people have, or how many people don't have an 800 credit score today out of those hundreds of millions of people that have credit cards?
It would restrict credit for around 75 to 80% of the current market.
75 to 80%
that
of the,
would be around
I'm sorry, but say
150 million.
75 to 80% of the current credit card holders.
Yes.
And how would that happen? Would they simply lose them on day one, or what would happen?
It would be fairly quick. It would be fairly immediate, because ultimately risk-based pricing allows issuers, and there's 4,000 plus issuers that compete for consumers' business every single day, to go out there and make sure that consumers have access to this necessary liquidity and source of credit in a very sustainable way. You can't do that for free. And part of this is making sure that we have plenty of options. And you mentioned the 0% balance transfers. There were 60 billion in balance transfers last year in 2024 alone. We are focused on making sure that consumers understand those different options. But to simply take away a source of credit for consumers seems incredibly punitive.
You know, in the 1980s, we had a tough time on the ag markets in South Dakota. We had usury rates in place, and because we had usury rates in place, there were banks that simply wouldn't loan to farmers anymore because, well, it was been a tough time. A lot of the guys were struggling, and yet, in order to put seed in the ground in the spring of that year, Bill Janklow was governor at the time, and he looked at it and he says, "Look, I don't care if it does cost a little more interest rates. We've got to get these guys some credit so they can actually put their crop in the ground." It's the reason why South Dakota at that time eliminated their usury rate. In doing so, banks charged more than what the traditional usury rate was, but we had farmers that survived because they could actually borrow the money. My concern with this whole discussion is that you say we've got over 4,000 different banks that issue credit cards today. I'm just wondering, it seems to me that these folks that have got these great ideas about issuing 10% credit rates, out of the 4,000, I'm sure one or two of them could do that today. But I'm just curious why we don't have some new startups by these folks that have got these great ideas. And they could issue 10%. In fact, they could go to 8%, and they could get a lot of people coming in. I wonder how long they would actually be able to continue to offer that rate based just upon the individuals that might not be able to qualify for a regular card but would love to have that interest rate. Is there a reason why we don't have a lot of people offering that 10% interest rate today?
It's just simply not sustainable. The worst thing we can do for a consumer is to extend them a product that they cannot afford to pay back. One of the things, and I do want to just push back on a couple of the different comments about the overall balances, if I've got a second, because
About 10 seconds.
Could you loan me 30 seconds?
I loaned myself 30, so
Thank you.
I much to do there.
one of the most important things to understand is that through the pandemic, over the last 6 years, really 8 years, 40 million new people came into this market. So when we talk about balances being $1.2 trillion, that's because we've got a lot more people who had access to this very important source of liquidity. You did have higher prices, so balances also went up. That is what drove APRs. APRs are not a bank profit. APRs are how we extend credit.
Thank you.
Thank you. Thank you, Mr. Chairman.
Yes, sir. Senator Van Hollen.
Thank you, Mr. Chairman, and thank you for holding this hearing. I think it's indisputable that families all over the country are seeing prices and costs go up. In President Trump's first year, families paid $310 more for groceries than they did in 2024. They paid $110 more in electric bills than the year before. Now, I think we all recognize that the economy is complex and price increases cannot always be attributed to the policies of the president or administration. In this case, it's pretty clear they can be. Because of the president's tariffs, families have paid $1,700 more in tariff costs. Gas prices are up 40%, thanks to President Trump's catastrophic war in Iran. And so as of last month, inflation now stands at 4.2% annualized rate, which is the fastest growth in 3 years. Now, we have heard President Trump say recently that he, quote, loves inflation. He's also said that that affordability is a fake word made up by Democrats. So, Dr. Morgan, just to sort of level set on facts, is the affordability crisis a hoax made up by Democrats, or are people experiencing price increases because of the Trump administration policies?
It is not a hoax. This is something that families are dealing with every single day.
And so I want to talk briefly about the other side of the affordability equation, right? On the one hand, we all face costs and prices. On the other hand, our ability to afford them depends on the income we've got, what money we have in our pockets or bank accounts. And so I do think it's worth taking another look at what was President Trump's signature legislative policy accomplishment. He would call it an accomplishment. I think it was really bad for the country. And that was what they called their Big Beautiful Bill, which provided huge tax cuts to the very wealthy at the expense of everybody else. Dr. Morgan, it's correct to say that the wealthiest taxpayers benefited the most from that so-called Big Beautiful Bill, right?
That's correct. The wealthiest taxpayers benefited the most, and the bill actually cost the lowest income families money because of the cuts to Medicaid and SNAP and other programs.
Right. And just to emphasize the point, I think we should look at this chart that shows that the richest 1% of income earners got 22% of the benefit of those tax cuts. And overall, the top 20% income earners got 72%. I will also say this distorts the picture over time because some of the tax cuts that went to sort of middle-class families included things like the no tax on tips, which actually I think is a good idea, although I think if you're in that income level and your income's not just in the form of tips, you should also get a break. But those were all sunset, right? Those tax cuts for working people are going to sunset in a couple years, right?
That's right.
And so this will get even worse in terms of the distributional impact. In fact, so bad is the situation that the White House tried to reframe and sort of label its bill, the Working Americans Tax Cut Act. I mention that because I have introduced a piece of legislation called the Working Americans Tax Cut Act that gives 100% of the tax cut benefits to people who are not in the top 20%, compared to the Trump Republican plan that gives 72% of the benefits to people who are in the top 20%. Let me just turn with my remaining time to overdraft fees, because families paid more than $12 billion in overdraft fees last year. They can often be small. I mean, you can go and get a cup of coffee and not realize that your $3 cup of coffee ended up getting you a $35 overdraft fee. And banks love these. I mean, the rates can be as high as 16% effective annual interest. In fact, they did so well that there was one sort of middle bank executive whose bank raked so much in on overdraft fees that they named their boat overdraft. Now, in 2024, CPB tried to work to rein these costs in, but when the Trump administration came in, they lifted it. And the impact has been, as I say, $12 billion in overdraft fees. Isn't it true, Dr. Morgan, that overturning these rules hurt consumers and help boost bank profits?
Absolutely. The cost to Americans for dialing back this rule is about $5 billion. And I think it's really important to put this in the context of what we're hearing from the representatives of the banks here today. The banks will kind of frame overdraft fees as something that's necessary to provide a service, but overdraft actually used to be a courtesy to to bank customers, and it's turned into a profit center for the banks. So we see the banks and their lobbyists fighting really hard to keep these fees in place in order to maintain those profits at the expense of consumers. And then we see the Trump CFPB really shifting from an organization that represented consumers to an organization that represents industry interests.
Thank you so much.
Thank you.
Senator Tillis.
Thank you, Mr. Chairman. Ms. Johnson, have you looked at the what I consider to be largely failed attempts to cap credit card rates in other jurisdictions?
We certainly have. I mean,
Give me an idea of how the movie ended.
yeah, look, it never works. We have a ton of data. We've got a ton of history to learn from. Illinois is a great example.
I was about to ask you about Illinois. Give me what I've seen in the Illinois example. At least one, I believe, Senator Marshall's the other co-sponsor of the amendment on credit cards. So this is not just a Democrat-Republican thing. We have an honest disagreement among Republicans. Go through a few of the things that happened when Illinois did the arbitrary rate cap.
Look, they even had a 36% all-in rate cap. And what ultimately happened was nearly 40% of subprime borrowers simply lost access.
44%. Let's see, loans to subprime borrowers decreased by 44%. Loans to deep subprime borrowers decreased by 57%. 40%, let's see, financial well-being sentiment dropped by 40%. 11% reported an improvement. So it doesn't look like it's something that you would consider to be a best practice, does it?
No, absolutely
Has this
not.
been implemented in any international jurisdictions or other countries that you've studied?
Look, there's
How were the results there?
again,
Remarkably similar, right?
terrible.
It's like, my God, I mean, you know
Time and
how
time
this
again, it
movie's
just
gonna
doesn't
end.
work. It
I
works
don't
exactly
care which release it is, whether it's Toy Story 1 or Toy Story 5. You know, it's, my God, it's not going to end any differently.
Right.
I don't even know why we're having this discussion. And then the whole concept of not being able to rate for risk
Yes.
in
Risk-based
anything.
pricing is so important.
I mean,
to the
you're
ability
helping
to
people
expand
from
access.
themselves. I get that it used to be an overdraft fee, used to be a courtesy. And you know what? But last time I checked, a lot of the banks still give you 1 or 2 passes. But when it becomes a chronic problem, at what point are you expected to actually know how much is in your bank account before you write a check? That's what this is. It's nothing more than that. It's financial literacy. I'll put money into financial literacy. I'll put money into real-time, don't write this check because you're about to get money and you've gone over the customary limit that banks will actually write off. Everybody's talking about like banks get you, it's a profit center. I don't know of any bank that doesn't give you a forbearance on the first 2, 3, 4, 5 overdraft fees. But folks, at what point do you actually have to own responsibility for a bank account? I mean, to me, it's that simple, but maybe I just don't get it. We talk about affordability as if it's something new. And that's bogus too. Affordability is always a problem, folks. It's just a matter of where it is on the margins. I've said this repeatedly in this committee. I know when I had an affordability problem, it's when we weren't living in a house anymore. We were living in a trailer. And I saw the overreach of regulatory environment, and the Cardone administration put me back in a trailer park, because they were well-intentioned but poorly implemented policies. Every time we try to artificially gloss over some of the problems that we have here with financial literacy, making sure that people really understand to spend within their means, government tries to help me out, and I'll be damned if it's not the times it sends me back into that trailer park. When we start paying attention to the people who are really on the bubble. And I'll tell you right now, we got a real problem because we got some rich people making a lot of money, but we've got some people on the bubble that are hurting. And instead of talking around all this stuff and coming up with all these artificial constructs that have been empirically proven to fail, point to one. And in fact, I've got a minute left. If somebody's got an example of one of these arbitrary rate caps that have worked, I will yield my time and you can explain it to me right now. I got 45 seconds left. I want somebody who has expertise in this field to explain it to me right now.
So
When did it succeed? I've got a list of failures. All I've asked was a simple question. Point to the one time in the whole history of the world and credit cards globally where it's worked once.
I got it. And that is when the giant corporations.
No, you didn't answer my
No,
question.
no, I'm not.
All I asked was, I'm
Oh.
sorry, I'll reclaim my time, Mr. Chairman. I just want one. I'll go for a second round if somebody needs more time. One example
I have
of where
one
this
example.
precise policy worked.
I have
It's
one
going to be a
example.
short discussion. As a matter of fact, I've got 5 seconds left now, and there's still no one here that's going to be offering up one
I'm
successful
here.
example. My time has expired, Mr. Chair.
Mr. Chair,
I
I
will.
just
I will.
can't bear.
Ranking member,
any
ranking
more
member, ranking
attacks
member, ranking member, ranking
on
member.
President.
Ranking member, let's do this. Let's abide by the rules.
Mr. Chair,
Rules by the chair. Here's
Mr.
what
Chair, I've got,
Senator Smith, if you are willing, I will give
yes.
the ranking member 30 seconds, and I'll give you a 30-second rebuttal, and then we'll go to you. I'm happy to hear this.
Well,
I
if
think
that would be-
if there's
I
an
would-
example. I want to hear the example.
I was going to
wanna give-
defer to the ranking member to answer this question, and then I would love to have my 5 minutes to talk about
good. Knock it out.
affordability in
Ranking
small
member.
towns.
We are being civil, by the way. This is great. A
Yep.
public discourse, a public discussion where there's strong disagreement is actually good for the public to hear.
It's not a partisan thing. Because we got people on my side now who feel the same way. I'm on board.
Okay.
So I
30
just,
seconds.
thank you. I just wanted to remind my colleague that back during the COVID crisis, the financial institutions all were given free access to overdraft their accounts at the Fed. It saved them literally billions of dollars because they could get free access to money when they didn't have money in their accounts. And the government politely asked them to extend the same courtesy to their own customers, which they refused to do, and they raked in billions more in profits.
30 seconds up.
So it worked for the big boys,
Senator-
it just didn't work for the little guys.
So it's never worked before, but I look forward to
It
somebody
worked for the
presenting the
big
first
boys.
successful implementation. Thank you, Mr. Chair.
All right, Senator Smith, it's your time, but Senator Smith, it's still your time.
Well, thank you, Mr. Chair and Ranking Member. And I'm going to shift this conversation to, I want to understand and have a bit of a conversation about how this so-called affordability agenda is working in small towns and rural places. And Dr. Morgan, I have a question for you. You know, I come from Minnesota. This is a place where food and agriculture are economic drivers in my state. And farmers are telling me that things are tough, that in fact it is so much harder to afford to run their businesses than it was just a couple of years ago. Farm Bureau says that farm bankruptcies were up nearly 50% last year, and Minnesota has the most farm bankruptcies of any place in the country in the first quarter of 2026. So what's driving this? I mean, first, fertilizer prices, diesel prices, input costs for farmers they're the highest that they've been in years. And then, of course, the chaotic tariff policy has made it very, very difficult for Minnesota producers to find access to markets that were their markets even just a year or so ago. So it's pretty clear to farmers in Minnesota that this is a bad situation for them. I'm wondering, could you talk to us a little bit about how this affordability agenda looks like for farmers in this country?
Yes, absolutely. So you hit on many of the main points here. Fertilizer prices spiked after the Trump tariffs went into effect. And in fact, the Trump administration had to actually exempt a number of fertilizers from those tariffs. And then they jumped again with the war with Iran. So, we're seeing both fertilizer prices up high. As you mentioned, diesel prices are up. Electricity prices are up as well, and all of these are squeezing small farmers who are just trying to stay afloat and who often have very thin margins. I think it's really important to point out that for people living in rural communities, that's kind of just the tip of the iceberg,
Yes.
right? So in addition to what they're dealing with in their small businesses, we've found that school districts across the country are really struggling with many of the same affordability challenges that individual families are struggling with, including higher electricity prices, higher gas prices, especially in rural areas where busing is a really big component of a school system's budget. And then the cuts that the Trump administration and congressional Republicans have made on health care.
Right.
And
I'm really
effect
glad
of-
you raised this because this is a huge issue. Talk about you think about the economic impact of rural hospitals as just one example on the economic vitality of small towns, not to mention the importance of having access to health care in small towns and rural communities. And so, talk a bit about that and what those impacts are on rural communities in terms of their ability to afford stuff and get access to the stuff that they need.
Yeah, absolutely. So we're seeing kind of a double whammy here from the impact of tariffs, which have also had an impact on healthcare pricing for the services that hospitals offer, as well as the impact of the cuts to Medicaid, the failure to extend the ACA tax credits. And so, rural hospitals are the ones that are being hit the hardest. And what we're seeing is that they're pulling back on services. So people are having to drive farther and farther to get access to really basic services like emergency services or maternity health. So it's turning into a really big crisis. It's the kind of situation where people can really feel the affordability crisis every time they try to get a doctor's appointment or seek emergency services.
And so I want to just take a minute also to talk about the impact on food. So first, you've got the question of what is the residual impact on global food prices with the lack of access to fertilizer that's happened because of the Iran war and what that means about food prices going up potentially as we get into the second half of this year. And that'll, of course, have an impact on all communities, not just rural communities. Could you address that?
Yes, the price of food has gone up pretty much across the board. The Century Foundation and the Groundwork Collaborative have put out a number of reports tracking the cost of foods. We typically tie them to holidays. So you see the cost of hams going up, the cost of hamburgers going up around Memorial Day, Halloween candy. So you have this kind of rise in price that we're seeing people, and I know the CBA alluded to this, putting onto their credit cards. But we've also had this enormous dialing back of SNAP benefits.
Right.
So 4 million people have lost access to SNAP benefits and are, really struggling to find food, which is where we see these findings that about 1 in 3 people are actually skipping meals in order to try to endure this affordability crisis.
And if you add on to that the so-called One Big Beautiful Bill included this big cost shift onto counties, many of them red counties, who are now having to pay for more of those SNAP benefits that they did in the past. And that's putting a huge pressure point on county budgets and is forcing counties to think about additional cuts to SNAP, which is also going to make it that much harder to afford your life in small towns and rural communities. Thank you, Mr. Chair.
Yes, ma'am. Senator Kennedy.
Thank you, Mr. Chairman. I have to say, I'm a little disappointed. You all seem like fine people. And here's... And I can't see, Mr. Carbone, you seem to be here to promote cryptocurrency. I love cryptocurrency, but I don't think that's the problem with our economy. Mr. Brown, you're here to promote Realtors. I love Realtors, but that's not going to solve our economic problems. Ms. Johnson's here to promote banks. I love banks. Dr. Morgan is here to bash Trump without telling us that she formerly was part of the Biden administration and worked for Mr. Chopra at the CFPB, and that your policies caused inflation to go to 9%. I think those would have been relevant things to tell us. I guess you thought we were going to look up your background. Can we agree that the problem of affordability is the prices are too high? Duh. Does anybody disagree with that? And prices are too high because of inflation. Does anybody disagree with that? And inflation, despite Dr. Morgan's political beliefs, is not just a Trump problem, it was a Biden problem, was it not? Okay, so here's my question to you. Let's start with you, Ms. Johnson. How do you get prices down? That's what we're here for. How do you get prices down?
Well, we think a lot of the things that you all are doing, focusing the committee on the sources.
Tell me how to get prices down.
You increase supply and you make sure you cut the red tape.
You increase supply, okay? Some people want to talk about deflation. If you believe in deflation, as we see it in the world today, you need to change your meds. China's got deflation. How's it going for them? They've got about a 20% unemployment rate for their young people. The only way out of the inflation is to grow our way out of it. Am I wrong? You're going to have to increase our economic growth, not at the top line, but so people feel it. You're going to have to increase wages. And to do that, do you disagree with Mr. Brown? We're going to have to grow the pie. Right or wrong?
Well, Senator, first of all, I'm here to support home ownership. In supporting home ownership.
No disrespect, but
realtors.
whatever. I'm sorry if I offended you. How do you think we can get out of these high prices? Otherwise, I mean, you can try to go, promote deflation, get ready for 10% unemployment. Okay, then Dr. Morgan's really going to be bashing us. Okay, tell me how we grow our way out of it. I don't see any other way to deal with inflation.
I think,
but to grow people's wages.
I think that we increase inventory. We reduce zoning restrictions. We do a lot of the same things that are
And
in
how
the
are
bill,
you going to
bill.
increase inventory?
By
Who holds the inventory? Businesses. You're going to have to stimulate the economy and help businesses to grow, aren't you?
Well, I come from California, which is ground zero for the lack of housing affordability, and it's a little more complicated than that.
I don't think you want to answer my question. Ms. Johnson, aren't we going to have to grow the economy and therefore increase wages in order to help people deal with the inflation? If I'm wrong, tell me. If there's a better way, tell me.
I think growth has been a key driver. Consumer spending continues to be strong. It's what's driven us through one of the most tumultuous times that we've been through, including bringing historic high inflation. We also do need to address prices. And I think the Fed's focused on it. Price stability has got to be key.
Okay.
Yeah.
So we basically we're free enterprise in America. We're basically, to grow the economy, you've got to stimulate businesses and try to direct labor to share in the growth. Is that right?
Yes.
Okay. Dr. Morgan, are you a Democratic Socialist like your colleagues?
No.
You're not? Do you? I noticed that y'all's new policy is to create a 4-day, 32-hour work week with no loss in pay. Where are we going to get the money to do that?
That's not my policy.
You don't think we ought to
Familiar
do
with it.
that?
I'm sorry.
You think we ought to have a federal jobs guarantee?
I think a federal jobs guarantee is a good idea, yes.
Oh, you do? Okay. How do you think we're going to pay for that? Fair? You believe in the Easter Bunny, do you?
I think it's incredibly hard to pay for these things when we're giving tax cuts to the ultra-rich.
Yeah, okay. You think that all the growth in our economy just goes to the ultra-rich?
I think that we just gave massive tax cuts to the wealthiest in this country, yes.
Yeah. You are a Democratic Socialist, aren't you?
I have never used that term to refer to myself.
No, I know. You have a
use
Nazi
whatever you'd like.
tattoo?
Excuse me?
Do you have a Nazi tattoo?
I don't have any.
Mr. Chairman.
Okay.
Thank you, Senator Kennedy, and we have Senator Cortez Masto.
Thank you. Let me put this back on track. So much for attending today. I can tell you how we grow the economy, and we're a perfect example. We got culinary members here in the audience. Culinary are part of our service industry in Nevada. Our industry is our tourism trade industry, which, by the way, posts nearly a $14 trillion in revenue in this country. But because of the bad policies of this administration, we are not growing that economy. In fact, there's a $14 billion trade deficit in 2025. Why? Because this administration has cut Medicaid, they have chaotic tariffs, the war of choice in Iran, the barriers put in place of so many that want to travel to the United States, the bad policies, the high costs that leaves less discretionary funds for families to travel. That is part of the problem. So we can eliminate some of the policies of this administration. That will help grow the economy. And I will tell you, I believe with the culinary, one job should be enough in this country. One job should be enough. And you should be able to afford put groceries on your table, to pay your energy costs, to put a roof over your head, and so much more, and afford health care in this country. That's what it's about. And so I appreciate all of you being here because that's a conversation we have. And one of the pieces of the puzzle here is housing and a roof over your head. And I was so pleased to see in a bipartisan way that we passed the road to housing here, the 21st Century Road to Housing. I thank the chairman, I thank the ranking member, everybody here that worked on that in a bipartisan, bicameral way. But now we have to fund it. We have to remember there's programs in there that need to be funded. One of them is the home program that I was very pleased to be able to actually put the legislation in to modernize the home program. So, Mr. Brown, let me ask you this question. Why is the home program so important for building more affordable homes and increasing that supply? Actually, I don't know if you have your speaker on.
We do support the home program. Which section is that, Senator?
That is in the Road to 21st Century Housing. That's
The
the home
501?
program. Yeah, that's the one that actually finances federal dollars that come into states for the home program to help finance supply. If
Yeah.
you're not familiar with it, happy to have one of the other panelists.
No,
talk about
I
it.
think it's very important. I think that overall, this bill is extremely important to increasing affordability in the housing market because, you know, you're cutting red tape, you are cutting regulatory burdens, and you're increasing inventory. And I think that's the way that we're going to be able to tackle the affordability crisis. And I think that this bill goes a long way. It's a great start. I mean, more work can be done, but it's really, there's some really good things in this bill that are really going to help the housing affordability crisis in America.
And that's the key, right? It's one thing to pass it. Now we have to authorize the appropriations for these programs.
Yes.
The home program is a grant program through HUD that brings out those essential dollars, federal dollars, into our communities to build housing. And I think it's
Affordable
important.
housing, yes.
Affordable
Yes.
housing. It's important that
extremely
we
important.
authorize it. Thank you. I appreciate that. Let me talk to Dr. Morgan. I have been concerned with what I'm happening with the CFPB. As the former Attorney General of Nevada, I work closely with CFPB to protect consumers. And now this administration has systematically eliminated the CFPB. And I am concerned now with what that means for consumers in general and in Americans. Nearly 22 million families pay more than half their income to keep a roof over their head, yet the president's proposal to cut funding for affordable housing programs like home and gut the CFPB Bureau doesn't help families who have seen rents rise 50% since 2020. How does the president's decision to cut and gut the Consumer Financial Protection Bureau enable landlords to still charge junk fees to renters? Is that still happening in this country?
Yeah, it's a really good question. So, you know, the gutting of the CFPB has taken the cops off the beat. So there's really no one kind of minding the store for consumers and making sure that financial institutions are following the law. It gives a green light to predatory companies to break the law as they see fit. And, you know, when it comes to renters in particular, the CFPB had really been watching this kind of like proliferation of products that were being put into the market in order to bridge the gap between rent and what people could actually afford. Rental credit cards, different kinds of innovative payment processing platforms, security deposit replacement products that turned out to be a loan or kind of a shady, another kind of shady product. And so not having the CFPB in place to actually crack down on those practices is really important. The other role that the CFPB plays is on the research and market side. They were the organization that was keeping an eye on what was happening with family finances, keeping an eye on household financial stability, raising the alarm when household financial stability became a larger problem that threatens the economy overall. And they're not doing that either. So there are a lot of threats here for renters and homeowners alike.
Thank you. I know my time is up. Thank you, Mr. Chairman.
Thank you, Senator. And on behalf of the chairman, Senator Ricketts.
I'd like to thank the chair and ranking member for holding the hearing here today, talking about affordability. Now, I'm going to start with a topic I typically bring up in Environment and Public Works. But since we're talking about affordability, I'm not going to miss the opportunity here, and that's about biofuels. I know Senator Rounds knows all about this. Biofuels are a win-win-win. They save consumers money at the pump. It actually helps clean up the environment, and it's great for our farmers and ranchers. In fact, last weekend I filled up at my local Hy-Vee and saved 55 cents a gallon on E10, which is a 10% blend of ethanol, compared to the regular 87 octane gasoline. If we pass E15, that would allow for even more savings for Americans, put more money back in Americans' pockets. I was glad to see the House pass my Congressman Adrian Smith's E15 bill, so I want to work with Senator Fisher on getting that passed in the Senate side, so I'll put my little plug in for that. But one of the other things we're talking about is the Road to 21st Century Housing bill that we passed and why that was so important. You know, one of the things that we saw was that home ownership 10 years ago, the first-time home buyer was 31 years old, and today it's 40. And addressing this, it's not a new problem. When I was governor of Nebraska, we had the same sort of issues with regard to enough housing stock. I think, Mr. Brown, that's one of the things that you referenced is we got to have more houses. You have more houses, you bring the cost down. So that's one of the things we can do. And so one of the things we did when I was governor was create the Rural Workforce Housing Fund to be able to create this fund that would work with communities and developers to create more housing stock. And that is the goal of what we're doing here with the 21st Century Housing Bill, is to try to find more ways to create more housing stock. So working with Chairman Scott and the rest of the banking colleagues here, we're working on making housing more affordable for Nebraskans. The House passed its bill. We voted on ours. I've put a number of common sense 21st Century Road to Housing Act bills into this so we can build more homes. It includes priorities to be able to help break ground quicker. One estimate, regulations, for example, count for about 25% of the cost of a single family home. For an apartment building, it's actually 40%. It's even more. This is burdensome and duplicative regulations that add to the cost of homes, but also extend out project pipelines. The longer it takes to build a house, the less available those units are going to be as well. In Nebraska, housing projects often draw both HUD and USDA money for a portion of their funding, and those processes, both those agencies have their own processes for reviewing and inspection, and they can also be very overlapping, creating confusion, bureaucracy. So one of the things that I put in the 21st Century Road to Housing Act was the Streamlined Rural Housing Act, which will require HUD and USDA to work together so they can, instead of doing duplicative processes and serial, try to put them in parallel to be able to make that more efficient. The bill also directs the agencies to work together on cutting other red tape. Eliminating those delays will help get that money out faster, which means then that money will go to building homes faster. So that's an important part of what we're trying to do here. Another issue is breaking ground on a project for NEPA reviews on land that's already gone a past review. For example, sometimes the National Environmental Policy Act, or NEPA, requires review for power or water lines in development areas that have already had them. These are known as infill sites. The Rural Housing Regulatory Relief Act that I introduced would streamline NEPA reviews for projects that pull funding from USDA and are located on infill sites. Again, eliminating this duplicative and unnecessary regulations is a common sense will help speed up housing construction. So, Mr. Brown, I've talked about a couple of these. What kind of impacts do these kinds of reforms have on project costs, timelines, and completion?
So you just hit the top three: zoning, regulatory, and environmental. Those are the things that really delay projects, that add to the cost. Your estimates are spot on, adding about 25 to 26% of regulatory costs before you even break ground, which is really a huge barrier for a developer or a builder in the marketplace. 40% for multifamily before they even break ground. So this bill does a tremendous job at cutting some of that red tape. And I think it's going to be a great step in terms of producing more housing inventory, multifamily and single-family dwellings in this country.
So by cutting some of this red tape, then we'll be able to reduce the timelines. Is that accurate?
Yes, reduce the timelines, streamline the process, which means it's going to be less expensive to build.
Great. Well, these are the kind of common sense reforms that we want to put in the package to be able to help make sure this got done, which is exactly the point. So thank you very much, Mr. Brown, and to all of our witnesses. And
Thank you.
thank you, Chair.
Thank you, sir. Senator Reverend Dr. Brother Warnock.
Well, thank you so much. Your introduction was prescient. You'll see why, Brother Chair. According to a recent Fox News poll, more than half of all voters feel that President Trump's economy only helps rich people, with an additional 15% saying his economy helps, quote, no one. And that same Fox News poll found that 3 out of 5 voters feel pessimistic about the economy. Doesn't matter much what those of us on this panel feel. What do the American people feel? Consumer sentiment is near record lows. Ordinary Americans know Donald Trump's economy isn't working for them. Dr. Morgan, you're an expert on the economy. I don't know your faith tradition or if you share a particular faith tradition at all, but I'm a Matthew 25 Christian, meaning I like to center my work on the least among us, the poor, the most marginalized. Isaiah, whom I've been reading a lot lately, says, who are you to crush my people, to grind the face of the poor? So I want to dig into that verse from Matthew 25 to assess the Trump economy. It says, for I was hungry and you gave me something to eat. I was thirsty and you gave me something to drink. Dr. Morgan, how have the president's policies been for hungry Americans?
Senator Warnock, the president's policies have pushed more and more Americans into hunger. We've seen actually 4 million people lose their SNAP benefits under this administration. It's about 700,000 of them were children. And the Century Foundation's own polling shows that 1 in 3 Americans have skipped meals in order to deal with their cost of living crisis.
So you said 4 million Americans. Mm-hmm. And you said 700,000 of the Americans kicked off of SNAP are children?
That's right.
Because I met with the speaker and others, and they saying that these are able-bodied men who are kicked off of SNAP. But you're saying these cuts are leaving children food insecure.
Right. That's
Let's try another one. The text goes on to say, for I needed clothes and you clothed me. Dr. Morgan, how have the president's policies been for poor, unemployed, or unhoused Americans?
The tax cuts alone had a massive effect on low-income families. Low-income families actually lost money under H.R. 1 to the tune of about $1,200.
That's the one big, beautiful bill?
That's right. But the Trump administration has also taken other actions that directly target poor and unhoused families. The Trump administration has attempted to impose time limits and work requirements on rental assistance. They've proposed cuts and changes to programs that support the homeless. And then rising utility costs are also hurting the poorest families as well.
Matthew 25 says, for I was sick and you looked after me. What about the president's health care policies, especially when it comes to health care affordability?
This is really an acute problem for families right now. We've seen cuts to Medicaid that have taken insurance away from families. We've seen the failure to extend the ACA premium tax credits that has jacked up the cost of health insurance premiums for many American families. We're also seeing increasing costs on employer-sponsored plans. So people are really faced with the choice right now of being uninsured or choosing, kind of like a skimpier health insurance plan in order to get coverage. And at the same time,
the Trump administration and Washington Republicans cut $1 trillion out of Medicaid. They call it waste, fraud, and abuse. Is it fair to say they cut more than waste, fraud, and abuse?
That is correct. They cut care for American families.
For I was a stranger, the text says, and you invited me in. How has the Trump economy been for law-abiding immigrants and dreamers living in the shadows?
We've seen a kind of xenophobic attack on our immigrant neighbors. We're seeing families who are afraid because of the actions of ICE to go to work and to send their families to school. It's incredibly crushing both for those families and for their communities and those of us who live among people. And then we've also seen these attacks to try to take away benefits and programs from law-abiding immigrants. So it's hugely concerning.
So who's served by this economy? That's a long range of people who seem to be suffering. Who's served by the economy, the Trump economy?
I mean, it serves the rich, right? It serves Donald Trump himself. It serves his billionaire colleagues, and it serves, the banks who are represented here at this hearing, who have gotten the Trump administration to roll back protections for working families in order to maintain their profits.
All right, I'm a few seconds over, and so I'm going to bring this to closure, Brother Chair. But Donald Trump has been president for 18 months. And while he and his advisors love to blame Joe Biden for rising costs, Americans elected him to lower costs. He's been at it for 18 months. He's raised costs for everybody, shredded the safety net meant to catch people during tough times. This Trump economy isn't just bad. For me, it's a moral abomination. This is bigger than politics. It's about humanity. Thank you so much for your testimony.
Senator Banks.
Thank you, Mr. Chairman. Mr. Brown, as you know, the Road to Housing Act passed the Senate yesterday. We expect it to pass the House today and hopefully be signed by the President very soon. There are many important parts of the bill. I think the bill is significant. There are some who say that it's not, but I think it's a significant bill that will go a long way to help solve the housing crisis and help your members do what they do to serve families. One part of the bill that I authored along with Senator Warner on the other side is called the Reside Act. That's fairly common sense, but it would allow communities to compete for grants and take empty warehouses, old factories, dead strip malls, shuttered hotels, and then turn those structures into housing. I had a lot of mayors across Indiana, Republican and Democrat mayors of small towns, big cities, all agree that would be a new tool for them that they could use to solve the housing shortage in their communities. But I wonder if you agree that would be helpful. What are some other parts of the Road to Housing Act that you think are significant that will go a long ways to helping us address this issue?
I do agree in that. I think that's a very important provision. There's lots of underutilized commercial structures throughout America that are just sitting there vacant. In fact, in my own business, we sold a commercial warehouse in an opportunity zone to a buyer who then developed it into residential units. And I think that is a great example of how you can take an underutilized commercial structure that's not producing anything, housing or income or anything, converted to actual living units where people can live. I think that there's a lot of provisions here, especially the streamlining of the process to reduce cost, helping out with zoning, helping out with reducing the environmental layers of environmental in terms of developing housing. I think that's very important. This just hits so many areas that's going to reduce time and reduce cost and streamline processes. But back to your original comments, I think that's a very important part, especially as it pertains to opportunity zones.
Not maybe the bill's not a silver bullet, but will go a long way. You believe that?
Yeah, I think it will over time. I think it will.
Is there a silver bullet out there that the committee should be looking at that would address the housing crisis?
We haven't come up with a silver bullet yet, but next I hope that that Congress really looks at More Homes on the Market Act. I think that I made comments when I first started the hearing that I really believe that if we can double the capital gains exclusion, it's going to add instant inventory to the marketplace, and in doing so, it's going to reduce some of the housing prices.
Yeah, which I fully support. Ms. Johnson, can you talk about why mortgages are costing more? I mean, what are the rules and regulations and fees that are being added that's making mortgages so darn more expensive than what they used to be?
Thank you for the question. The last 10 to 15 years in particular, it's really been a combination of heightened capital requirements. There's regulatory scrutiny that banks, non-banks all have to go through. There's litigation risk. There's operational burdens. And so there's been a focus on, one, the supply issue, which we think is first and foremost the most important thing. But there's also been an intent focus from the administration of increasing bank participation. And I think that there is a real need to increase bank participation in this market so that you have more competitive options for borrowers. And we're excited about the executive order. We've been very pleased that there's a recalibration in the Basel proposal on mortgage. I think that that'll go a long way to reduce costs.
Any big ideas we're missing here?
I think your focus on supply and using a carrot stick approach is absolutely the right one.
And Mr. Carbone, in plain terms, can you explain how dollar-backed stablecoins lower everyday cost for people who are underbanked or paying too much in transaction and remittance fees?
Absolutely. Thank you for the question, Senator. Right now, the average remittance fee in America takes 6.5%. So for every $100 an American is sending overseas, the recipient is only getting $93.50. And it takes 3 to 5 days to get there. With a dollar-backed stablecoin, they can send it instantaneously and almost for free. That is a huge example as well. We're already seeing after the Genius Act passed, cheaper, more competitive payment options for Americans. We're starting to see merchants start to incentivize users, like gas stations incentivize users to pay cash instead of credit, incentivize users to pay with dollar-backed stablecoins. Regal Cinemas right now is giving 10% off all tickets and concessions if you pay in dollar-backed stablecoins instead of using credit or cash. So the Genius Act is working. We're seeing more competitive payment options for payments and for remittances.
Good to know. Thank you. I yield back.
Thank you, sir. Senator LBR.
Thank you, Mr. Chairman. And thank you also to the witnesses for being here today. I want to start off by just expressing my deep gratitude to the chairman and the ranking member for your leadership and all of my colleagues on the passage of the bipartisan 21st Century Road to Housing Bill. This landmark legislation is something that I think America's been waiting for over 3 decades. And so I am just grateful to the members here who worked on it. I think we took a great step forward in addressing our housing supply crisis. Many of the bills that I secured in the package will empower local communities to tackle housing affordability by encouraging zoning reform, reducing red tape, and unlocking innovation. Looking very forward to seeing that become law, and also looking forward to Road Point 2.0, just putting it out there, manifesting that. And finally, I want to extend appreciation as well to the House members for passing, because we're going to speak that they're passing it, and we will see it signed into law. And today, as we talk about the housing affordability crisis, we also think about the broader crisis of affordability. And I know the chairman talked about the One Big Beautiful Bill putting forward $250 a month for many American families, but all I could think of were the calls and the people that I see in my own state, folks who are paying $50 to $80 to fill up their gas tank, constituents who have written in and said, because of the lack of ACA tax credits, I now have chosen to just give up insurance, which means that health insurance could roll into medical debt, and it has an impact on all of our costs. I think about folks who are food insecure right now, and the cost of food, whether it's at the supermarket or if you can even go to a restaurant. And I don't think that that covers what people are feeling. And so for me yesterday, I was able to, with my congressional delegation, Senator Coons and Congresswoman McBride, we held a roundtable for veterans in our state. It was a veterans roundtable, and at the roundtable we had representatives from different veterans organizations, and then we held a resource fair in addition to the roundtable. And we kept coming back to this issue of cost and them not being able to afford to live. These are people who are our neighbors. These are people who have served this country and who are serving this country. And between the issues of homelessness, the issues of suicide, the issues of, again, just being able to make ends meet, it really became clear that they are feeling the brunt in a way that many of us don't even feel. And so, Dr. Morgan, I wanted to ask you about the CFPB, which has historically played an important role enforcing the Military Lending Act and protecting service members from predatory financial practices. Has the CFPB reduced its enforcement of the MLA?
The CFPB has reduced its enforcement of the MLA, yes.
And has reducing that enforcement hurt affordability for military families? And can you talk a little bit about how?
Yes, absolutely. And I just say to your earlier point, there is research that shows that those tax cuts are really wiped out by the cost of the war with Iran. So, when people are coming to you and saying, this doesn't add up, it doesn't add up. But in terms of, military members, the CFPB has stepped in over the years many, many times to protect military service members, from predatory practices by lenders, by allotment processors, student loan servicers, and others. And then under the Trump administration, we've seen this massive dialing back of enforcement and supervision to the point of non-existence. And people don't even have a place to file a complaint anymore. And this really lands hard on military service members. And in fact, the CFPB has actually walked away from lawsuits and settlements that would have put $80 million back into the pockets of military service members who were subject to illegal practices.
It's my understanding that since 2011, service members from all 50 states and every military base have filed more than 400,000 complaints to the CFPB, and that there was a complaint database. Can you just tell us, why was the Office of Service Member Affairs at the CFPB created in the first place, and what are the consequences of weakening the protections as well as lessening the staff and shuttering offices?
It's a really good question.
You only have about 15 seconds to answer this question.
Financial.
Could I have the time that Louisiana had?
No, ma'am.
A little bit longer.
I will just say very quickly that financial readiness is a critical component of military readiness. So when people are distracted by dealing with predatory lenders at home, or when their security clearances are held up based on a debt collection that they shouldn't owe, that affects our ability to fight wars and to keep our country safe. So this is a really critical component of the overall picture on defense.
Thank you. These are the people who protect us. We deserve, and they deserve to have our protection as well. Thank you, and I yield back.
Senator Moreno.
Well, let me just start my portion by complimenting you, Mr. Chairman, and actually our ranking member. I think what we got done here in the Road to Housing Act was monumental. It obviously also is an indictment on the person who used to occupy your chair, because obviously he was unable to get anything done. So to both of you, kudos, and to your predecessor, shame on you. In terms of where we've been hearing a lot about today is the word hoax. Now, I learned English as a second language when I was about 6, 7, 8 years old. Some would say I still haven't learned it completely. The word hoax can sometimes be made to seem that something's not real, but it actually means deception, that there's a deception going on. Mrs. Johnson, what was the average inflation, cumulative inflation during the Biden years? Do you know?
I know it reached a peak of 9.1%.
It did. So cumulatively, it was 21.5%. Under President Trump, it's cumulatively 5%. You represent bankers. Is 5 less than 21.5?
Yes, it is.
It is. So when somebody creates 21.5% of cumulative inflation, and then the next person creates 5% cumulative inflation, and the people who did the first part blame the second one for price increase, it's a hoax. So we got that out of the way. Now, Mrs. Johnson, I do want to talk about some of the things that have been brought up about banks. Why do you post deposits after withdrawals at most of your financial institutions? Most banks, for example, in Ohio, that receive deposits, those deposits don't credit the person's account until after withdrawals had, and a lot of that results in overdraft fees. That's something that you guys can either do voluntarily, or you're going to make us pass a law to do that, because it's crushing working Americans and it's fundamentally unfair.
Well, thank you for the question. Look, there is a lot of technology on the back end, and a lot of banks
just do it the right way, though. Just do it the right way. You shouldn't have people whose paychecks are coming in, and you don't take that into account until after you've counted all the withdrawals. Just bad practice. Just don't do bad things, and make us have to do that. You were talking about also these 0% interest offers. Nothing has crushed working Americans more than 0% interest offers, where now you have compounding interest that's due as a result of these offers, and these people get absolutely destroyed and crushed. Don't do things like that, and certainly don't take a victory lap for offering those types of things. All you do is you give an opening to the people who think that that kind of bad behavior is unnecessary.
Could I give just a quick response here?
Sure.
So a couple of things. One, APRs are comprised of a number of different things: cost of funds, credit risk, fraud, operational costs.
I get all
The
that.
increase in APRs has been driven primarily.
I'm talking
all
about
the Fed's
compounding interest, the fact that you send people magic checks that make them think that it's 0% interest. They miss the payment by 1 day, and you pay retroactively for every single month. Yeah, just don't do. I'm just telling you. Look, if you want to have,
think I've seen
if you want to have good cooperation from people who care about working Americans, which is Republicans and Democrats, don't do things like that. That's just my advice. You can take it or not take it. In terms of you, Mr. Brown, what is the position of the National Association of Realtors when it comes to the institutional investor ban?
Institutional investor ban?
Yes. Prohibiting large, giant Wall Street firms from buying homes in the MLS, competing with ordinary Americans. Is that a good thing or a bad thing?
I think that institutional investors are a problem in some communities. They're certainly not the cause.
I didn't say it was a cause. Do you support not having institutional investors compete with individuals to buy a home, yes or no?
Yes.
You do? Good. Okay, perfect. And I'll turn over to you, Dr. Morgan. Sorry. What does a dozen eggs cost today?
The last time I bought them where I lived, it cost about $7.
Oh my God, you need to move. You would fail the prices right dramatically.
I do need to.
The average price of a dozen eggs is $2.19. We are going to send the police after the grocery store where you do business. Do you know what it was under Biden? Obviously you don't, because you didn't know now. It was $2.65. Is $2.19 less than $2.65?
It is.
Okay, perfect. So then prices for eggs have gone down from Biden to Trump. What's the price of a barrel of oil today?
I don't know off the top of my head. I think it was $100 a barrel.
It's 73.
Okay.
What was the average price during the Biden years?
I don't know.
It was 82. So the price of a barrel of oil has come down. What is the price of what is the most commonly used fertilizer for farmers?
I don't know.
It's nitrogen. What is the cost per ton under Biden for nitrogen fertilizer?
I don't know, but can I?
So it's $1,000 a ton. It peaked out at $1,600, and now it's $800, half of the peak under Biden.
Is it all right for me?
Let me just
Okay. I would
again.
love to be able to
You are not the contestant on the next Price is Right. You would not do well.
Okay.
In terms of electric vehicles, do you think it's good public policy to offer $7,500 to multimillionaires to lease foreign luxury vehicles?
I don't believe that's happening.
No, it's not happening. You're exactly right. That one you got correct. It's not happening because Republicans got rid of that in working families tax cuts. It was absolutely happening under the Biden years. In fact, 250,000 people got $7,500 to lease luxury electric vehicles. Was that a good decision or a bad decision?
Senator Moreno, I think these questions are very important, but I just have to say, Donald Trump is the president right now, and prices are extraordinarily high. People are having
not
to skip
eggs,
meals,
not oil,
having to-
not fertilizer, and now we have.
I just think
and now we
telling
have
people that prices are not high
prescription
is
drugs.
not going to work.
Prescription drug prices on TrumpRx.com are down 85 to 95% for 836 of the most commonly used drugs.
We've tried.
So my point is that when people create a forest fire and then blame the other person for said forest fire, I would call that a hoax. Thank you, Mr. Chairman.
Senator, you now have 6 minutes.
Thank you so much, Mr. Chair. To you and Feliz Cumpleaños to our ranking member who just had a birthday yesterday. This was the saddest exchange that I've seen. And with all due respect, I think it really does underscore the problem that we have in our country right now. Too often in these bodies, I think the people who sit here don't shop like the people that we represent. They clearly are so out of touch. With all due respect, my colleague just said that the price of eggs is $2 and something. I don't know what in the world grocery store. I don't know that people even grocery shop apparently for themselves, because I'm in the grocery store every week and I'm paying $7 for a dozen eggs, and that is the issue that we face right now. So I appreciate the opportunity to talk about affordability. Because the reality is that in this administration, We are now in an economic disaster in our country. And this is not hyperbole. The people in America are tired of being told not to believe their lying eyes. Those who shop like, who buy gas, who pay for utilities, we are living a whole different existence, apparently, than the people who are supposed to represent us. These are the facts. 4.2%. This was May's inflation rate. And the prices have risen steadily under President Trump's administration. They are the highest, as a matter of fact, that they have been in 3 years, almost $4. This is the average national price for a gallon of gas. Gas is the most expensive that it has been literally in 3 years. $2,500. This is the estimated cost every American family is paying because of President Trump's tariffs in 2026. 1/3. This is the wealth controlled by just the top 1% of American households. So the American people do remember a year ago when this president did promise to end inflation on day one. Imagine how ridiculous that was. He promised energy and electricity prices would be slashed. This is not hyperbole. Go pull back the tape and we can see what he said. He insisted that housing prices would decrease. He said that he would make America affordable again, and he said the cost of groceries would go down on day one. But instead, it's harder to afford a down payment, purchase health insurance, take your family on vacation, put food on the table, or buy back to school supplies. This is the reality for the average American. Americans should know that this isn't coincidental. They understand it. It's because of the chaos, cruelty, and corruption that they have seen with their own eyes. The Trump tariffs continue to make groceries and other goods more expensive for business and for families. And last summer, despite rising prices, Republicans rubber-stamped Trump's cruel and callous bill that ripped health care and food assistance away from millions of Americans. And this failed war of choice in Iran has sown more economic chaos. It has raised gas and fertilizer prices. And if you look beyond the chaos and the cruelty, you also can see in plain sight the blatant corruption. The Trump family has made over $1.4 billion from crypto schemes, often leaving regular American investors with losses. A Trump family business is on the fast track now to become a bank, saddling everyday Americans and community banks with more risks. And fraudsters and scammers continue receiving presidential pardons because they are friends of this president. The loot, I have to tell you, the smash and grab that's happened with this administration means the loot is literally hanging out of their pockets. And they're betting that Americans won't pay attention. But while this administration continues to fail, we're working to make bipartisan progress. I'm so proud to be on this banking committee. I want to thank our chair and ranking member for the tremendous work that they have done on the Road to Housing Act, which the Senate passed last night. What a miracle it was to see it passed by such a large margin. And the Road to Housing Act is proof that Congress really can rise to the occasion and do what's right. And I am particularly proud of provisions that I champion, which will make it easier for banks to invest in affordable housing and create a federal grant program for people to make essential repairs to their homes so they're not forced to sell or to foreclose. While families are priced out of home ownership and the dream of a stable house is slipping away, Congress took a big step forward to expand the housing supply, reduce red tape, and make home ownership more affordable. Now, this is worth celebrating. Our kids deserve it. They deserve it. My 21-year-old daughter, who is so different than her grandparents, my parents married at 21 and 22, and within 5 years of their marriage, they could buy a modest home. The average age of a first-time home buyer is 40 years old. So Congress should continue to step up. And while this administration's chaos, cruelty, and corruption is occurring at every juncture, I will never hesitate, along with my colleagues who are willing, to roll up our sleeves and to work in a bipartisan fashion to address our shared goals. Thank you.
Senator, you're done?
Yes, you gave me an extra minute. I didn't even need it, but thank you so much.
Sounds good. Well, let me just say, for senators who wish to submit questions for the hearing record, those questions are due 1 week from today, Tuesday, June 30th. Witnesses have 45 days from that day with answers. I will say that this has been, frankly, I think a constructive hearing, not always positive, but always constructive. However, as it relates to the ranking member and I looked up the price of eggs so that we would be on the same page. Literally, the price of eggs go from about $1.79 at Wegmans in my neck of the woods, which I didn't have to look up because in South Carolina you can get eggs for about $3 a dozen. Elizabeth, ranking member, did find some for as high as $9 for eggs. I will simply say that the ability to compare prices from the Trump administration to the Biden administration, I'll take that comparison even now, almost any day of any week, on any topic. The fact of the matter is that Senator Warnock and I had a conversation about having a Matthew 25 hearing at the Banking Committee, which I actually look forward to it, because if you start and read the entire chapter, it does give you some responsibility for those who have talent to do good things with that talent from 1, 2, and 5. It also goes into bridesmaids and lots of other conversations, but it does get to the place where we are asking ourselves really important questions about how we treat each other. Really important. I'm not sure that we always remember that when we're having a conversation with others, but I think it's incredibly important for us to recognize the importance of loving your enemies and praying for those who persecute you, at the same time taking a look at those who are struggling. There are multiple ways to try to address the issue. I think both sides try to do so. Sometimes I became a Republican as a guy who grew up in poverty in a single-parent household, because after taking a serious look at the consequences of good policy and bad policies, not good intentions and bad intentions, I decided the best way for me to impact communities that were struggling was by being a Republican. However, on this committee, we should continue to have the type of engagement that allows the public to see disagreement without being disagreeable, and ultimately, I think that we achieved that goal today. However, I do look forward to the opportunity to have a discussion about Matthew 25 sometime in the near future. Hearing adjourned.